Hi, I'm Garth McKenzie from traderscorner.co.za, and this is your weekly look at the S&P 500 and the Nasdaq indices. As always, I start with a look at the S&P 500 on a daily chart. And what you can see quite evident on this chart over here is that the market has made a new break to all-time highs. After a little bit of consolidation through the latter part of February and into early March, the market seems to have managed to find buyers at the lower levels just below the 50-day moving average, and the price has been moving steadily higher over the last week. Now, the break above 39.50 is a bullish break, and that puts the market into new all-time high territory, as you can see on this chart over here. And from here on, it looks as if it's a hop and a skip to that big round figure at 4,000. And markets usually are a bit sticky at the round figures, but one can expect a little bit of an overshoot if it gets to that 4,000 area. And note that there's quite a bit of resistance from that overhead or that rising trend through all the recent tops going back to November last year. And that resistance comes in at about 4,050. So I would expect that this market still goes a bit higher in the near term and heads up towards 4,000 and probably overshoots to 4,050. And then from that area, one might expect a little bit of consolidation to set in. If we then take a look at the hourly chart of the S&P 500, there you can see the recent trading activity in a bit more detail. Notice the move above 39.25 was bullish. The market pushed through there, then it retraced and tested 39.25 as support, and now it's managed to push up through the prior high at 39.50. And that's, as I said in the previous slide, that's what opens up further gains towards 4,000. And that big round figure is likely to act like a magnet in the not too distant future. So all in all, still a pretty bullish outlook for the S&P 500 with this market at new all-time highs. And markets that are at all-time highs often do tend to continue going a bit higher. If we then turn our attention to the Nasdaq, this is the Nasdaq 100 daily chart. And here you can see the picture's not quite as bullish as the S&P 500 was. This market is still some way off its prior highs. And this talks to the theme that's been evident lately, where value stocks have been in favor over growth stocks. A lot of the Nasdaq 100 is very concentrated in growth stocks, and those growth stocks have been underperforming the value stocks recently. And you can see that quite clearly in this Nasdaq chart. Last week, I mentioned that there was a head and shoulders pattern that had validated when this Nasdaq index broke below 12,800. The head and shoulders did move lower, but it didn't get all the way to the target. The downside target would have been at about 11,800, which is where the 200-day moving average comes in. That target level was not reached. Instead, the market reversed higher, and now it's managed to regain the neckline at 12,800, and it's pushing higher. So with that being the case, one does then ask the question whether that was a false break to the downside below the head and shoulders neckline. And often a failed head and shoulders pattern can be deemed bullish. And if that is the case, and if this market can hold above 12,800, then it opens the possibility that we could actually see some further gains for the Nasdaq here. So that 12,800 level is going to be important to watch in the near term. And lastly, let's take a look at the hourly chart of the Nasdaq 100. There you can see that head and shoulders pattern that I spoke about in a little bit more detail. Also, you can see the false break to the downside and the recovery back up above 12,800. So if this market can remain above 12,800, then next stop on the upside would be 13,300. And if it can take out 13,300, then that would really be quite a good story for the bulls. And it would potentially open a move up towards a gap in the chart, which is at about 13,600. And beyond that, back to the prior highs at 13,800. So really the key level to watch here for the Nasdaq in the near term is going to be that 12,800 area. That is support for now, and we wouldn't want to see the market break below that. If it can stay above there, then it looks like it's heading up to about 13,300, and that would put the bulls back in charge above that level. That's all I've got for you this week. I'll be back again next week with another look at both of these indices.